three key things that I thought about. Firstly, 2024 really saw the beginning of a transition towards a lower inflation, lower interest rate environment at a macro level. So what that really means for our sector is over time, ideally, we will see a reducing of the gap between valuation expectations by buyers and sellers. In the higher interest rate environment over the last couple of years, we've seen seller expectations perhaps grounded in history and higher values, while buyers have been looking at higher interest rates, et cetera, and therefore chasing deals perhaps at slightly lower valuation expectations. And so that's created an environment where it's been hard to get deals done. Secondly, there's a broad realization over the past 12 months, and it's been building over the last few years around the need for significant investment and for power for digitization and AI. And that's really been a massive trend in 2024. I'm not saying it's come out of the blue. It's been building over the last few years. But that's really just grown, and it's grown exponentially over the last 12 months. And as we look forward, we see that really setting up for being one of the key trends and big investment areas in 2025 and beyond. And then, despite expectations, perhaps at the beginning of the year, it's continued to be a pretty weak fundraising environment. There was a lot of expectation in early 2024 that fundraising would improve through the year from what had most expected, I think, was the low in 2023. As it actually turned out, 2024 was lower. And I think that was primarily driven by a reasonably slow deal environment and therefore less returns of capital back to allocators and limited partners. And as a result, the checks that they were writing and committing to funds, into new funds, really was quite low. So that's resulted in a sub $100 billion fundraising year, as we've seen, and I think positions the look forward into 2025 as a question mark about whether that starts to recover.
We felt like infrastructure was the backbone for some transformative changes in 2024, particularly in responding to power demand stemming from generative AI, driving decarbonization, and supporting the energy transition. Natural gas has emerged as a more immediate power solution that provides a crucial bridge during this transition to renewable sources. Its reliability helps to balance power grids that have become increasingly dependent on intermittent renewables like wind and solar. So in North America, both industrial reshoring and this rise of AI-driven data centers has driven peak power demand levels, which has highlighted the benefits of natural gas's role in ensuring energy stability. So in the transportation sector, infrastructure operators have stepped up in some remarkable ways as well. For example, European Airspace's free route airspace system began enabling airlines to fly shorter and more efficient routes, which was expected to cut up to 20 million tons of CO2 emissions this year. Airports like Heathrow also played a critical role in helping to reduce the cost of sustainable aviation fuel, or SAF, by offering incentives where half of the price difference between SAF and jet fuel is subsidized. We also saw some groundbreaking innovation advancements, such as dynamic EV charging systems, like those being tested by some toll road operators in France, which will enable vehicles to charge while driving. We also saw hybrid locomotives reduce rail fuel consumption by up to 80%, and early investments in hydrogen infrastructure have paved the way for its adoption between 2035 and 2050. So overall, we feel the groundwork laid in 2024 sets the stage for even greater progress in 2025.
So one of the trends that we're seeing in the US currently is industrial reshoring. And that is excellent news for the infrastructure sector, as those large industrial projects need a lot of supporting infrastructure. And those supporting infrastructure tend to be considered non-core for the industrial manufacturers. And they also have the potential of really being scaled up to create the environment for an increase in industrial clusters across the US. And so that's the first really fundamental trend that at ATI we're keeping an eye on. In parallel, and that's also very important, we're seeing the emergence of independent developers with high geographical specialization, facilitating the development of the new expanded infrastructure that is required for this industrial project. And the good news there is that those developers are really starting to be more and more sophisticated. They're really starting to understand the need of institutional capitals and being a really important part of the market segment to get those projects to market. We are also seeing municipalities, counties, and regional bodies being more and more involved in this development of that supporting infrastructure, because obviously they are extremely interested in developing those industrial clusters in their jurisdiction. But also what's really interesting is they're starting to leverage the infrastructure requirement of those industrial players to expand municipal regional infrastructure. That would benefit the municipalities and the region. And so we're seeing a greater tendency for collaboration in between the industrial project owners, the local developers that are highly specialized geographically and with increased sophistication, and the municipality and the counties and the regional bodies. And that creates the perfect environment for those infrastructure projects to get off the ground faster, better, and also for investment opportunity for American III.
I think that 2024 has been a great year for us, for the company, and for infrastructure in general. I think that we have seen how these assets really are needed, and they really help to solve congestion problems in urban areas, right? That at the end of the day is our main goal. So I think that now infrastructure, I mean, if you take a look to the press or the news flow, I mean, there's a lot of stuff around infrastructure. I think that in general, we are seeing that the investment in infrastructure should keep growing because it's a big need in infrastructures in the US, right? So the way we see it is that probably it's going to be a funding gap in terms of, the needs of infrastructure and the available funds from the different states. So that's where the private sector plays a key role. So we like seeing ourselves as a partner with these different states to help them solving these congestion problems, right? So we see this trend growing. We see that in the areas where we are, really these assets are very much appreciated, and we are very optimistic about this, the growth that we expect to have in the sector, to be honest.
I think our most significant lessons really centered around proper planning so that you can deliver on time. So much of what we're facing in the field right now is focused on delivering in with whatever kind of headwinds or not surrounds the investment tax credits. It's more important now than ever to deliver your field on time. So working with subs, getting procurement just right, and making sure that you have materials where they need to go. I would say 2025 is going to be an exceptional year because during 2024, specifically in ERCOT, so the Texas market, there seemed to be a lot of pressure, a lot of new fields coming online. PPA pricing was depressed, and that seems to have gone away now because the Texas growth story in the power market there just continues to take every bit of energy possible. Also, the world of data centers and the world of this high performance computing build out seems to be gaining momentum in a way that even if you assume that half of it doesn't materialize, it offers just an unbelievable amount of demand out there that I think is really proving the naysayers wrong. So I think that's also seen in the amount of PPAs being signed for a lot of technologies that aren't utility scale solar and wind, which I consider to be kind of the conventional routes. You're seeing a lot of the modular nuclear, you're seeing landfill gas recapture, you're seeing a bunch of other sources that might be a little bit out on the kind of the spectrum or the delivery timelines, all of a sudden people are signing those. So I think that the massive build out is going to make 2025 very special. And in addition to that, we're seeing something very unique happening with the kind of the boogeyman of tariffs. And who knows where tariffs go. But I think that that might mean that in a couple of years, we have a largely domestically based supply chain, which gives us all an opportunity in 2025 to place our roots and place our bets on who's going to be the winner of that. So I think this is going to be a really exciting year, one that will not look like 2024, that's for sure.